Hi, this is Scott Varilek, Varilek Trading in Sioux Center, Iowa. So we're following through with the small recovery in the live cattle, the feeder cattle. It's starting to be, trusted just a little bit more. I mean, it's been quite the wipeout that we've had from record highs. The $60 break and the feeders, 50 in the fats, or 25 in some of those fats, and it's been rough. Cash has been following to the drift, and it's been tougher to sell live cattle on a cash basis. We've had excellent feeding weather. That's one reason to note. And cattle are gaining really, really well. So, I mean, the sheets that you're tracking, you're going to come in 150 pounds over your tracking, 160 pounds. I mean, there's a lot of weight on the market. And every time the packer knows that they have leverage, they're going to use it. So even though we feel like there's tighter numbers, we aren't as backed up as we were in some of these wrecks like 2015 or during the COVID. We're nowhere near backed up like we were in those times, but any little nugget a packer can get to use the leverage, they do it. So really our only ways of trying to force this market higher anymore is liquidation. We slim our cow herd down, and we get really current, have tight numbers on supply. So it's only a tight supply is the only reason we get to rally, it feels like, and that's a little frustrating to me from a cattleman myself. That's how it works, because we're struggling with that a little bit. I'm hearing cash maybe picking up a little bit to some 170 here. That could give us a little bit of a boost on Friday's trade to end the week. But the demand side looks great. You got $31 choice select spread. Excellent packer margins, retail margins. The beef is moving. You got record high Dow Jones, S&P. So the stock market's on fire. We've got the good interest rate news that there's some projected breaks in some of those interest rates. So all of that feels so great, and we're just struggling to turn this cattle market around. Open interest is really thin. It's tight. Saying that the funds aren't really jumping back into this market. They aren't tripping over themselves to get in anyway, and it is towards the end of the year, so I don't anticipate some fund making a large risk position here right before the end of the year. So we might have to turn the calendar a little bit before we get some better news. The deferred contracts is where anybody that wants to be long has turned. They're buying further back because we think it's going to get better in the future, though it's a little bit tough right now. So would have been a better rally if it would have been on front news, the cash news, or the front-led contracts. But questions, give us a call. Varilek, Sioux Center, Iowa. The risk of loss in trading futures and or options is substantial.